Hello and welcome to part 3 of the American Liberties Criminal Intent Seminar. My name is David Merland. Nothing you'll hear me say is intended as legal advice. Anything that sounds like that to you, just consider something somebody else might do on a planet far, far away where the law matters. It doesn't matter here. I prove it on a daily basis, believe it. Today's June 5th, 2016, and I'm finally getting around to making the third part of the Criminal Intent Seminar, something I wanted to do for a while, because this part will be beamed at the anti-tax movement. As I've stated in the previous 2 seminars, there's a certain element that the prosecution never concerns itself with, and that's criminal intent. Criminal intent, there's 3 different attacks. Ignorance of the law is not one of them. A good faith misunderstanding of the law, void for vagueness, and lack of criminal intent. You can't prove that you lacked criminal intent. You can't prove that you had a good faith misunderstanding of the law if you didn't do any research, if you didn't study anything. But if you did, and you arrived at certain conclusions, case law, very recent case law, with which the government concurs, says that you're not criminally willful or intentional. You lack mens rea, criminal intent. We're looking at the contents of the flash drive you received. I'm going to open this folder, and you see that you've received all 3 parts of the criminal intent seminar to date. The first one was taped probably September of 2015, then December of 2015. Now it's June of 2015. And there's I had this a lot on my mind for quite a while. And as I commented in these previous 2 courses, I always noticed that even people that didn't believe for a minute they broke the law would go to prison. And now I know exactly how the Department of Justice gets around the essential element of criminal intent. It's a part of every statute, every criminal statute. You have to have intended to break the law to be guilty. And yet, people that say, you know, I'm a non-resident alien, I'm a citizen of a state, and I'm not a citizen of Washington, D.C., and I got a bunch of cases that say that there are citizens of a state, and my understanding of the law tells me that I should file a 1040 NR. And of course, you'll be leaned and levied into poverty with frivolous income tax return penalties under Tax Code Section 6702. But some people went to prison for doing it. And in fact, there may be plenty of case law, and I have 40 different excerpts from cases coast to coast on the federal level, from cases where people claim to be non-resident alien, and the court said, no, Section 1 of the tax code imposes the tax, and here's the regulation that explains citizens of the United States owe the tax. That's you, and so you're guilty, and you're wrong about the law. But there was never a discussion about whether or not you had a good faith misunderstanding of the law. And as we'll see, that absolves you of an allegation that you acted willfully when you failed to file, failed to pay, or structured your affairs, or filed a statement in lieu of tax return. Whatever you did, if it was based on your understanding of the law, and they've made the law so complex and convoluted, voluminous, that no one can really understand it. There's people that say, you know, Pete Hendrickson knows more about the tax code than anybody I've seen. You can know a lot about the tax code and still not understand it. And I don't have many kind words to say about the anti-tax movement. I've been working for the people that go to prison, the people that would be indicted. And I found with all my knowledge and all my skills, the best I can do is prevent indictments. shut down IRS criminal investigations. Get the Department of Justice to close grand jury investigations by proving the taxes are not imposed the way the IRS says they are. So my specialty is proving with statutory arguments how the taxes are imposed, in contrast to how the IRS uses its authority to collect what it says are taxes. They're two totally different things. And we'll get into many different documents. This is going to be a lengthy presentation. So bring your lunch. You want a tablet. If I were you, while I'm listening to this presentation and watching this screen capture video, I would take notes that at, let's say, at 25 minutes into the seminar, 25 and a half minutes, whatever, was the discussion of Pete Hendrickson and the Section 1341 tax returns. And at 50 minutes into the presentation, we were discussing IRS Publication 17, whatever. Take notes like that so you can cruise through this presentation later and hear what I have to say about different portions of the Seminar Mens Rea 3 folder that you see here. That's today's seminar. Now, I'm going to touch on a particular case from, I think it's the first seminar, and I could be wrong. I'm wrong. Well, let's go to that first seminar. Anthony Elonis, Supreme Court decision, I think it was July of 2015. The Supreme Court gets into the fact that this guy didn't get a jury instruction that said if he doesn't intend to break the law, then he's not guilty. And the Supreme Court said he was entitled to that jury instruction, and so we hereby overturn his conviction. It wasn't under a tax statute, but the topic of criminal intent is thoroughly explored in this case. And I'm going to do a search for, let's see, ignorance. This is not to say that a defendant must know that his conduct is illegal before he may be found guilty. The familiar maxim, ignorance of the law is no excuse, typically holds true. Instead, our cases have explained that a defendant generally must know the facts that make his conduct fit the definition of the offense, even if he does not know that those facts give rise to a crime. So you'll still be held to ignorance of the law is no excuse. And they cite here with prominence Morissette versus U.S. Morissette, in 1952, his case reached the Supreme Court. In 1948, he went hunting on a practice bombing range in Michigan, where everybody hunted deer. And he got skunked. And on this bombing range, they were dropping, when they were practicing, they would drop these canisters. I think they were like 30 or 40 inches long. They had some gunpowder in it, and the rest was sand. And the gunpowder would make a puff of smoke, so the pilot of the plane that dropped it could track their aim by looking at where the puff of smoke came up. And he got, this Morissette gentleman got skunked hunting deer, and he thought to recoup his costs, why don't I scrape up a bunch of these shell casings that the bombers were dropping and cash them in for as scrap metal. And he gathered up a bunch of them that were stacked in piles, just wasting away in the weather, as abandoned property. And took them and crushed them on his own property and went out and sold them for scrap metal. And when he was investigated for theft of government property, he told the inspector everything. Sure, I went out there, I got skunked hunting deer, I collected all these shell casings, I sold them in the marketplace, I didn't try to conceal anything, and that's everything I did. I swear. And the judge in his case in U.S. District Court, it was for $200 or 2 months in prison. His choice. But the judge told the jury, you can't consider criminal intent. If he told the truth, he's guilty. If the prosecutor is correct, he's guilty. Because he admitted he took the shell casings. He didn't ask anybody about them. He just took them. And it doesn't matter whether or not he was criminally intentional. And the Supreme Court in Morissette versus U.S., 1952, said this case is utterly insignificant except for the fact that the judge instructed the jury as he did. Because criminal intent is part of every crime. And so while insignificant, this case could have far-reaching ramifications in federal criminal jurisprudence. No kidding. And after this conviction was overturned, the government again set aside the requirement that criminal intent is an element of the crime. And they've been steamrolling everybody forever. And what they do is they go to a grand jury, and especially in tax cases, and they just say, everybody knows you have to pay taxes. This person knows all about it. And they didn't pay the taxes. They didn't file a tax return. You have to file one. I have to file one. He chose not to. And so we're trying to get an indictment for failure to file, or for tax evasion, or both. And that's as far as they go to say the guy has criminal intent. Well, what if the guy doesn't believe the law imposes a duty? It's not a concern, because then they go and they get the indictment, and then they threaten the defendant until they plead guilty to a lesser charge. If the DOJ brings 2 counts of failure to file or tax evasion, 2 counts, that's as generous as they can be, and it's an invitation to plead guilty to 1 count. They'll drop 1 if you plead guilty to this other. But with tax protester gurus, anti-tax movement aficionados, they throw the kitchen sink at you. 10 counts of this, 10 counts of that, 10 counts of this. You got no choice but to plead guilty. And when you plead guilty, you waive all rights to appeal and collateral attack, and there they got you. And criminal intent was never a part of the equation. And so they've set it aside, despite the way the Supreme Court spanked them in Morissette versus U.S. And that's the mechanism they use to set aside the requirement to consider criminal intent. They threaten you. If you don't plead guilty by the end of the week, we're going to indict your wife. That was Robert Westinghouse, Assistant U.S. Attorney, Western District of Washington, 2007. In a meeting I was invited to attend by the defendant and his attorney. Hey Dave, why don't you come up and sit with us and listen to this guy threaten Ray with indictment of his wife. And I sat and listened for 2 hours while this man was threatened by the DOJ, and I figured out exactly what they do to the grand jury to trick him into a tax indictment. Actually, no, that was before I filed my criminal complaint in Congress in January 2006. So this would have been summer of 2005, I believe, somewhere back there. So anyway, that's how they set aside the requirement to consider criminal intent. They get the indictment. The easiest thing in the world is to get an indictment under the tax code. The hardest thing in the world to do is to prevent an indictment under the tax code. And my approach to the tax code has prevented at least a dozen indictments. I've watched criminal investigations by the IRS shut down. I've seen the DOJ either fail to get an indictment or choose to shut down a grand jury proceeding because of 2 key arguments that we'll get into later. So the Supreme Court said, you know, Morissette, he made full disclosure. He didn't try to hide any of his conduct. Look at this. But this court rejected that interpretation of the statute because it would have criminalized a broad range of apparently innocent conduct and swept in individuals who had no knowledge of the facts that made their conduct blameworthy. Well, the tax code and the regulations in 1996 was 21 pounds of rice paper. And so a whole lot of innocent individuals that had no idea, because no one has any idea, that the taxes were owed. The government can't refute, as I said, two key arguments that I use. But looking more broadly, to include the anti-tax movement, the people that file Pete Hendrickson tax returns, the people that concoct these international bills of exchange, the OIDs, file the 1040 NRs, file zero tax returns for other reasons, whatever. They don't believe they're breaking the law. I've met dozens of them and worked for many of those dozens that I actually met. And they don't believe they broke the law. I, on the other hand, can prove that it's not a violation of the law, and none of this is legal advice. The law doesn't matter. If the government can't handle you with the law, they'll handle you without the law, and you lose. But when there's a jury in your future, the jury is not the government. And the jury has to be instructed that a good faith belief or misunderstanding of the law means that you're not acting with criminal intent. So anyway, I went over the Morissette case in the previous seminar. You received 3 parts on this flash drive. I'm going to go ahead and close that case out. But a fascinating read. You want to read that whole case. Now, let's get to part 3. And as you look at this, the name of your video file that you're going to watch is going to be right there. Okay? And the first thing we're going to look at is miscellaneous documents. You see I've got Pete Hendrickson here, Kreitzer, void for vagueness. Very important decision right there. And letters. James Back is a defendant in Alaska, sentenced to 16 months in prison in December of 2014 for filing several Pete Hendrickson tax returns. Eddie Kane, I got his indictment right there. Rod Class had weapons in his trunk, I think it was, and got too close to the Capitol in Washington, D.C., and there's an amicus brief filed on his behalf. They're going to argue void for vagueness in there or overbreadth. Winston Shrout, first indictment and superseding indictment. They threw the book at him. He'll probably die in prison like Irwin Schiff did. And miscellaneous documents. First place we're going to go is IRS Publication 17. Watch this. IRS Publication 17, 2014 edition. And you're going to see something fascinating here. Cost basis. Now, understand. Part 13, basis of property. That means cost of property. Cost basis. The basis of property you buy is usually its cost. The cost is the amount you pay in cash, debt obligations, other property, or services. Excuse me, but don't they tell you your services are not your cost? You didn't buy your labor before you sold it, and so you have no cost in your labor. And right here, 2014, Publication 17 says your cost is your services. Your cost also includes, meaning we're still talking about cost, your services are a cost. Why would they put that in Publication 17? This is called the Tax Guide for Individuals. It's the blue and white book they send out to every resident on their database of American, quote, taxpayers. And yet it says your cost is your services. Well, on a tax return, I can't deduct my services. It's math, okay? I have to have a number. And so I have to deduct its value. What's the value of your services? The value of your services is what an unrelated party is willing to pay you for them in an arm's length transaction. U.S. versus Cartwright, Supreme Court, 1973. Tax Court, Robinson versus Commissioner. Black's Law Dictionary, 6th edition, page 109. Arm's length transaction is the basis for a fair market value determination. And there's a bunch of different, you see 2011, 2012, 2013, 2014, publication 17. And publication 17, partials. Some of these PDF documents would not let me edit them, and so you're going to have to go through there and look for parts 13 and 14 of publication 17. Now I'm back to the miscellaneous documents folder, and if you want to know what frivolous is, Terry Smith Tyler versus Ross Perot, Jimmy Carter, American Cyanomed, Iron Mountain Security Defense Intelligence Agency, IBM, David Rockefeller, NASA. This is frivolous. Your Honor, don't say what I filed is frivolous, because I have an example of frivolous right here. This woman sued all those people, and she was alleging a bizarre conspiracy involving the defendants to enslave and oppress certain segments of our society. Plaintiff contends she is a cyborg, and that she received most of the information which forms the basis of her complaint through Proteus, which I read to be some silent telepathic form of communication. You can read this case at your leisure. It's really a hoot, but she was in outer space, probably still in outer space. This is frivolous. My arguments are statutory. That's the opposite of frivolous. Now, recalling again, this case is directed at preventing indictments, particularly indictments of anti-tax movement aficionados, people that felt Pete Hendrickson made a good enough case for having filed, or for you to file Section 1341 tax returns. He made a good enough case for me claiming to be a non-resident alien, whatever he did, or Glenn Ambort, or Richard Cornforth, or any number of people. Okay, I don't need to recall the litany of gurus out there that don't have a clue, but they have a proposal that you behave a certain way, you file certain things. You poke the government in the eye with your left hand instead of your right hand, whatever, and it evokes the ire of the beast. Don't do it. And I've seen a lot of good people go to prison, and there's nothing you can do for them once the indictment comes down. They have to go to trial, or they have to plead guilty. If you go to trial, you stand to lose a lot more of your liberty than if you roll over and plead guilty. So there's no choice once the indictment comes down unless you're going to take it to trial and give it your best shot. But even then, you'll end up with your life and livelihood, your marriage, if you have one, your mortgage, and everything is going to be in the hands of a panel of strangers called a trial jury. They don't even know you. All they know about you are the lies that the prosecutor will tell them about you. And so your whole future's in the hands of a trial. You can count how many people beat the government in tax cases on one or two hands. And how many indictments do they actually bring? How many cases do they actually win through plea agreement? Dozens. Over the decade, hundreds. And people go to prison. And that is not a victory when you get acquitted by a trial jury. It's a close call. A victory is when you're not indicted at all. But it's certainly no occasion for an end zone dance. You don't go out there and hoop and holler and do jumping jacks in front of the government saying, you can't indict me, you can't indict me. They'll find a way. And so you wait until the statute of limitations is up to take a breath. because at any time they can get you if you didn't file and you didn't pay what they say you owe. And so I'm cautious this way, really cautious. Now, I'm going to show you two things very quickly here. Pay close attention. 26 U.S.C. Section 83 is the name of this document in PDF. And here you have, this is the 9th Circuit, 1984, CA9, that's Court of Appeals, 9th Circuit. CA7, 7th Circuit, concurring with this Alves decision and Cohn in the Centel Communications case. The IRS Office of Associate Chief Counsel, Revenue Ruling 2007-19. Robinson versus Commissioner, United States Tax Court, 1984. Cohn versus Commissioner, 1979, U.S. Tax Court. McNaughton versus Commissioner, 6th Circuit, 1989. Pledger versus Commissioner, 5th Circuit, 1981. Klingler Electric Company, District Court, Southern District of Mississippi, 1991. Montalepper Systemed versus Commissioner, 5th Circuit, 1992. Goodmanson versus U.S., 2nd Circuit, 2011. And what do all of these cases say? They say that Section 83 applies to all compensation. It explains how to tax it. Well, if it explains how to tax it, wouldn't that be the definition of income? Yes. Anybody that says income is not defined in the code has no clue of the existence of Section 83. Now picture this. I'm an expert, I have a curriculum, and I think you should file these tax returns, but I've never even heard of the statute that explains whether or not you owe a tax. That's a derelict. Experimenting with your rights, your life, your livelihood, your mortgage, your marriage, your reputation, liberty, it's all on the line. And these people will say they actually have a solution for you when they have to admit they've never even heard of Section 83. Section 83 applies to all property transferred in connection with the performance of services. This is 9th Circuit. If Congress had intended Section 83 to apply solely to restricted stock used to compensate its employees, it could have used much narrower language. Associate Chief Counsel of the IRS. Section 83 provides for the determination of the amount to be included in gross income when property is transferred to an independent contractor or employee in connection with the performance of services. Tax Court, 1984. To the contrary, the House and Senate reports specifically delineate transactions and transfers to which Section 83 was not to apply, and they do not exclude from its purview contractual provisions that were not tax motivated. The impetus for enacting Section 83, was the advent of exotic compensation plans, where company officers, corporate officers, would be paid in company stock. And you can't touch the stock yet. It's deferred. You can't have it until 2 years from now. And they called that deferred compensation, and the argument arose, it's not taxable this year because I don't own it yet. I won't own it for 2 more years, and so you can't tax me on it this year. And a whole bunch of really exotic things were dreamt up in corporate America, and so Congress wrote Section 83. 83B says in the event of restricted stock or restricted compensation, you can elect to have it taxed this year, or you can wait until it's vested to you, until you get ownership of it and can dispose of it at your choosing, and be taxed then instead. But Section 83A applies to all compensation. It explains how to tax it. Cohn versus Commissioner, 1979, in one paragraph, says all of this. The legislative history is clear. Respondent contends that the word any person in Section 83A encompass independent contractors as well as employees. We agree with the IRS. We reject petitioner's argument. While restricted stock plans involving employers and employees may have been the primary impetus behind the enactment of Section 83, the language of the section covers the transfer of any property transferred in connection with the performance of services to any person other than the employer, the person for whom the services were performed. The legislative history makes clear that Congress was aware the statute's coverage extended beyond restricted stock plans for employees. See the House and Senate reports. The regulations state that Section 83 applies to employees and independent contractors. There is no question but that under the foregoing circumstances, these regulations are not unreasonably and plainly inconsistent with the revenue statute. Consequently, they are sustained. All in one paragraph. McNaughton versus Commissioner, Sixth Circuit, the statute applied to all property transferred in connection with the performance of services, agreeing with the Alves decision at the top of this list. Pledger versus Commissioner, the taxing scheme imposed by Congress more accurately reflects what taxpayer received as compensation than a scheme that taxes the taxpayer on merely a portion of the compensation. Klingler Electric Company, 1991. Section 83A applies to all property transferred in connection with the performance of services. Montelepre System Ed versus Commissioner, Fifth Circuit, 1992. This is the first sentence in the opinion of the court. Section 83A explains how property received in exchange for services is taxed. Second Circuit, 2011. At the heart of this case is Internal Revenue Code Section 83, which governs the taxation of property transferred in connection with the performance of services. It is the definition of income. The definition of income has been in the tax code since 1969 in Section 83. And it does not say that the whole paycheck's gross income. It says, if in connection with the performance of services, property is transferred, the excess of the value of that property, of my value of my paycheck, over the amount paid, shall be included in gross income of the person who performed the services. That's me. So, if property is transferred for services, the excess of the value of that property over the amount paid shall be included in gross income. I need to know what the amount paid is before I know what the excess is. There's the definition of income right there. Income is excess over the amount paid, because income is profit. Profit and cost never share a penny, and only that which is over cost is profit. Cost defines profit. If cost is defined in the tax code, income is defined in the tax code. What is the amount, if any, paid for my paycheck? Here's a regulation under Section 83 that defines it. Amount paid. For the purposes of Section 83 and the regulations thereunder, the term amount paid refers to the value of any money or property paid for the transfer of property to which Section 83 applies. Any. Any is all-inclusive. Nothing is excluded from any unless the law provides for an exclusion. Period. And in the 90s, 5 trips all the way to the Supreme Court by October of 98, I didn't have this case law that follows. I always made the argument, where's your authority to exclude labor from any money or property? And they'll penalize you for asking. Well, in 2003, thereabouts, I found these 4 Supreme Court cases, U.S. versus Monsanto, United States versus Alvarez Sanchez, U.S. versus Gonzalez is in bold for a reason, and Department of Housing and Urban Renewal versus Rucker, which cites Gonzalez and Monsanto. These are 4 Supreme Court cases that say, and these were won by the government. The government argued about the term any property the same way I argued about it through the 90s and got my butt kicked. All my clients, 5 times to the Supreme Court. The U.S. government has won in the U.S. Supreme Court on 4 occasions, arguing the statutory terms any and any property are all-inclusive unless the law provides for an exclusion of something from the item or class of thing, property, or matter to which said terms applies. And here are the 4 Supreme Court cases. The IRS's exclusion of the value of personal services from the value of any money or property paid in that regulation, and from cash or other property, which is in Regulation 1.1012-1A, is arbitrary, and therefore, a fortiori, it is impermissible. You can't exclude labor from cost. This interpretation of any is universal. See these decisions citing Gonzalez, this Supreme Court case. Look at these cases in 2008, 15, 14, and 13, appellate cases and district court cases citing Gonzalez that all hold Section 83, or I'm sorry, the term any means everything. And so we revisit that regulation and we see the amount paid is the value of any property. Is labor property? You bet. It's the most sacred property. The most sacred and inviolable property of man. The basis for all other property is labor. Because if you didn't labor, you wouldn't even have a loincloth to cover yourself with. You'd be picking up rocks and smashing beetles with them. Labor is the foundation of everything, and therefore it's the most sacred and inviolable property. The government can't refute this argument. They will not get into this regulation, 26 CFR 1.83-3G. So that's one of my primary arguments if I set out to prove I have a good faith misunderstanding of the law. I know that it's a valid understanding of the law, but for the purposes of innocence, go ahead. Call it a good faith misunderstanding of the law. Okay? Now, what Pete Hendrickson did not have when he said, hey, file a tax return under Section 1341, he didn't have a bunch of case law that said 1341 explains how to tax compensation. And he looks right at these cases and says, I'm wrong. Dave is wrong. Section 83 is irrelevant. Well, what do the courts say? I've been to court and been to court and been to court, and they've never said Section 83 doesn't apply. The only way they ever got out of this argument was to say you didn't buy your labor before you sold it. And the counter is, where's your authority to exclude labor for that reason? This regulation says any property is a cost. They won't talk about it. They can't talk about it. They won't get into it. And now, the victories they got against me in the 80s, against my clients, they don't even cite those cases when I argue Section 83. Well, why is that? Because those cases reveal that the exclusion of labor from the value of any money or property paid is arbitrary. And all these cases down here say that you can't have an arbitrary exclusion. Any property means all of it. So checkmate on the Section 83 argument. And now we go to U.S. versus Melton. Here, in a 1996 case, United States Court of Appeals for the Fourth Circuit, listen to all that the government discloses in this paragraph. It's amazing. The government says your void for vagueness argument is wrong because it's obvious that you owe taxes. The statutes are clear. And you won't hear them mention Section 83. They disclose exactly how they calculate the taxes, and they do so without reference to Section 83. Watch this. Furthermore, the duty to file tax returns and pay income taxes is clear. Section 1 of the Code imposes the federal tax on taxable income of every individual. That's where we have the brackets for married individual, filing jointly, separately, head of household, surviving spouse, single individual, trusts, and capital gains. Section 63 defines taxable income as gross income minus allowable deductions. Section 61 states that gross income means all income from whatever source derived, including compensation for services. But Section 61 starts by saying, except as otherwise provided. Well, Section 83 is otherwise provided. Section 6001 and 6011 provide that a person must keep records and file a tax return for any tax for which he is liable. Finally, Section 6012 provides that every individual having gross income that equals or exceeds the exemption amount in a taxable year shall file a tax return. The duty to pay federal income taxes, therefore, is manifest on the face of the statutes without any resort to IRS rules, forms, or regulations. The rarely recognized proposition that where the law is vague or highly debatable, a defendant lacks the requisite intent to violate it, simply does not apply here. Well, what they just did was they started you in Section 61A. Gross income means all income from whatever source derived, including but not limited to the following items. But the statute starts by saying, except as otherwise provided, gross income means all income. What's an example of otherwise provided? Let me see here. Section 162. An employer can deduct the wages he pays to employees as a cost of doing business. Section 163. You can deduct the interest you paid on your mortgage. 164. You can deduct certain state taxes. 212. In the case of an individual, there shall be allowed as a deduction all ordinary and necessary expenses paid or incurred in the production or collection of income. There's some examples of except as otherwise provided. But you can't have Section 83. If you start in Section 83, Section 83 says to figure your cost, you can apply Section 1012. That's Regulation 1.83-4B2. And so they don't mention 1012 in this paragraph either. So they're starting you in the middle of the equation. The equation starts in Section 83. They only cite the second half so they don't have to run through the statutes that determine what is cost. The tax code has always included all labor or all property as a cost. Because Section 1012, basis of property, 1011 says the basis in 1012 is also known as the adjusted basis. And 1001 says the adjusted basis has to be restored to the taxpayer, and they have their legislative history in the 1939 tax code, Section 111, 12, and 13. Section 111, 112, and 113. So the standard for cost was even in the 1939 tax code. Labor has always been a cost, and they can't talk about it. But here we see, here's the equation the government follows when we know the equation is supposed to start in Section 83. And it includes 83, 212, 1001, 11, and 12. And on a Form 1040, there's no place to exploit those statutes. So 1040EZ is for reporting gross income. Section 83 provides for the determination of what is to be included in gross income, according to that revenue ruling we saw, 2007-19. So here we have this, and it does not mention Section 83, and yet we saw the case law in Section 83. They have to use it to determine your liability. So does H&R Block. So do all of the anti-tax movement aficionados, and they don't. They don't have a clue it even exists. Now, next, this is a standard indictment for compensation for services. This was I think a real estate agent, and she didn't report as gross income her earnings. And the government says She didn't pay the taxes she owed. And now we know they don't even consider Section 83. And by the way, this was 2010, March 30th of 2010. Taylor did not report these earnings to the IRS. Instead, Taylor did her ownership interest in the properties from the IRS and from other participants in the transaction through blah, 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 blah. Where is the reference to that which is cost? They jump right over it and speak very broadly. She had these proceeds from the sale and didn't report them. Well, were they compensation for services? Did she receive them from unrelated parties acting in their own best interest in an arm's length transaction? How did Section 83 operate in your conclusion that what she didn't report was actually gross income? Knowingly had and received taxable income. It has to be gross income first. Then minus the deductions, what is taxable income? And we now know from the Melton case, Section 83 in 2012 never come into play. And so here you have people from the IRS that'll tell you, I'm an expert. I'm an expert. You owed this money. You didn't pay it. How did Section 83 operate in your conclusion I owe a tax? And they have to admit, I am unfamiliar with Section 83. I heard in person a 20-year IRS agent on the stand in U.S. District Court, Seattle, in a tax criminal trial, answer a question about Section 83 that way. How did Section 83 operate in your conclusion Mr. Gebauer owes a tax on his compensation? And she says, I'm unfamiliar with Section 83. After telling him, I've been on the job for 20 years. I've done 500 investigations. And she's unfamiliar with the statute that explains how to tax your paycheck. So I have their pants down this far, that far with this argument. So she didn't report all these earnings so that the earnings would be reported, if at all, through the National Land Bank employer identification. They say you were concealing this for real estate commissions as required by law. How did Section 83 operate in your conclusion it was gross income? If it's not gross income, it's not over and above the exemption amount in 6012. No requirement to file returns. See how they've gotten totally around the first half of the equation. And they start you in 61A, and if you don't know to argue Section 83, you lose Section 83. So this is a standard indictment for somebody that was not in the anti-tax movement. They simply did not report and maybe sought to conceal revenue, not gross income, from the IRS. And now we have the Wesley Snipes indictment, claiming to be a non-resident alien who owes no tax. And he went to prison with Eddie Kane, as you see here. Eddie Kane right there. I don't know who Douglas P. Rosile is, but here you see Wesley Snipes. They say you owed a bunch of money, and you filed these tax returns trying to get out of it. Fraudulent tax returns. And Wesley Snipes is right in the middle of this conspiracy to defraud. It's meaningless except for the fact that the anti-tax movement and their attempts to reason how they are not liable under the tax code have landed a good many people in prison based on the 861 argument. I'm a non-resident alien. Overt acts. They did this. They did that. Those bad boys. And always there's a presumption that this $12 million that he got for being an actor, no doubt it was compensation for services. How did Section 83 operate in your conclusion he owed a tax on it in the first place? So forget the fact he filed the wrong tax return and had a frivolous argument in their eyes. Was it gross income to begin with? And he got hammered. When one statute, how did Section 83 operate? They can't talk about it. U.S. versus Messier Robinson. And this is kind of a standard tax indictment. They were not part of the anti-tax movement. They had Oak Hill Communications, and they were paid for putting antennas on their property, I think for cell phones. Gross income, 2006 through 2012, of $675,000 thereabouts. And 2000 through 2004, an assessment for $172,000. So you see they were making money from renting their property for the installation of towers. Let's see. The defendants threatened to sue the customers who sent funds owed to the defendants to the Treasury under a notice of levy or lien, whatever, as requested by the notice of levy, and falsely claimed that defendant Messier's customers were committing crimes, breaking the law by complying with the IRS notice of levy. How did Section 83 operate in your conclusion that they were claiming falsely that the IRS was breaking the law? You have to include Section 83. It explains how to tax all compensation. Count 1, 7212, corruptly endeavoring to impede the due administration of internal revenue laws. Let's see. Sending and causing to be sent to the IRS a worthless and fake money order. Okay, so it sounds to me like they were kind of in the anti-tax movement a bit with false securities endorsed to the U.S. Treasury. Was it a false money order? Sounds like a personal money order issued. Sending and causing to be sent false and threatening correspondence and bogus IRS forms to his customers in an effort to convince his customers to stop issuing the Forms 1099. Count 2, conspiracy to defraud the United States, 18 U.S.C. 371. So anyway, a pretty standard indictment, except for the personal money orders. And they were basically exercising a throw the kitchen sink at them philosophy. It's a notice of levy and not a levy argument. Okay? And they went to prison. Now we have the, let's look at the Silkman decision very quickly. This is a wonderful 8th Circuit victory by Lowell B. Craft in 1998. Here we see Elton Howard Silkman. He argued that they should have allowed certain evidence at trial because he said it proved I didn't have the liability they said I did. And the circuit court says, you're right, they should have allowed this evidence, and we hereby send it back for a new trial because they should have included this evidence. And they say certain things in this decision that are amazing. Let's see. There's one particular, read this case, okay? It's not that long. It's only 7 pages. Read this case. But there's one particular, here, the IRS assessments were offered as conclusive proof of an underlying fact that is an element of the crime, that taxes were in fact owed. He said the assessments were offered as conclusive proof. In this type of case, the overriding principle is that one charged with the commission of a felony has an absolute right to a jury determination upon all essential elements of the offense. The government has no authority for its startling contention that an IRS assessment is conclusive proof in a criminal trial that taxes were in fact owing. The government cites these 2 cases, but they merely held that when an alleged tax evasion rose from the failure to file a tax return, no formal assessment is necessary because the deficiency is deemed to arise by operation of the law. How did Section 83 operate? Now, let's see. In Voorhees, The taxpayer was charged with evading the payment of taxes by concealing assets at a time prior to the formal assessment. The government's proof of a tax deficiency consisted of the certificates of assessment and the testimony of an agent explaining how the tax liability had been determined. It then went on to conclude that the government's uncontradicted evidence was sufficient to prove a tax deficiency. Well, what if it's contradicted? We agree with the analysis in Voorhees. A formal tax assessment that has become administratively final is prima facie evidence of the asserted tax deficiency, and if unchallenged, it may suffice to prove this element of the crime. But the assessment is only prima facie proof of a deficiency. The assessed deficiency may be challenged by the defendant accused of tax evasion, and the issue is one for the jury. For this reason, a trial judge is prohibited from entering a judgment of conviction or directing a jury to come forward with such a verdict, regardless of how overwhelmingly the evidence may point in that direction. Now, the phrase I'm looking for is humorous. And I know I'm getting close. Here it is. For the foregoing reasons, we conclude that one accused of tax evasion must have the opportunity to prove, however unlikely the proposition may be, that an administratively final tax assessment does not accurately reflect the existence of a tax deficiency. Therefore, Silkman is entitled to a new trial at which he may introduce evidence relevant to whether there was in fact a tax deficiency in one or more of the tax years in question. They should have the opportunity to prove, however unlikely the proposition may be. How did Section 83 operate in your conclusion, I owe a tax on my paycheck? I just overcame this. However unlikely the proposition may be. You bet. People have been challenging the tax code for decades. It's a monstrosity with a million places for the judges to run. I took away all those places. You have to go to Section 83. Period. And so I've proven, however unlikely the proposition may be, yeah, Your Honor, I got your proposition right here. How did Section 83 operate? You deprived me of Section 83 to tax my pay. They can't deny it. Anyway, great case. You really want to read this. You should have the right at trial to prove that you were denied deductions, allowable deductions. So this case is an invitation to argue Section 83, and they didn't know it at the time. You also have that document in Microsoft Word right here. Now, order to comply with the United States IRS summons. 1992. These 9 arguments were raised by a nice old couple in North Carolina in a petition to quash an IRS summons, and in this 45-page memorandum, the judge explains how each of these arguments are wrong. Look at number 4. Authority to issue the IRS summons extends only to the ATF. They were relying upon the Code Service Table of Authorities. 1992. And this chief judge in U.S. District Court tells them, excuse me, but the preamble to the Code Service Table of Authorities says right in it, this table is supplied by the agency itself and can't be considered all-inclusive, and it may be inaccurate. Why are you relying upon it? It could be inaccurate. And it's not a regulation, so it doesn't have the force of law. And people are still teaching it. How do you do that to people? I had the answer in 1992. I got this in the mail from the couple that were plaintiffs in this action to quash the summons. And they said we raised basically the kitchen sink. We threw it all at the government. And here's what the judge wrote as the response. So, read and learn. There's a million lessons in this memorandum. How to use running footnotes, how to structure a memorandum, how to phrase your arguments. It's a spectacle to really how much a judge knows about the law. And then you step into the anti-tax movement and see how he destroyed the anti-tax movement. Non-resident aliens are not subject to this tax. The 50 states are outside the jurisdiction. He uses the state constitution of North Carolina to destroy those arguments. So anyway, for what it's worth, read this memorandum and look at what he does to the entire anti-tax movement in 45 pages. They aren't accusing you of receiving kickbacks. You can't claim Fifth Amendment privilege as a blanket objection. You have to argue Fifth Amendment in relation to particular questions. And the IRS summons doesn't have to have an OMB control number because it's not issued to more than 9 people as a collection of information under the Paperwork Reduction Act of 1974. And the rest of the arguments. Read this memorandum. The names of the parties were whited out, as well as the dollar amounts and the docket number. But for what it's worth, this is what a chief judge thinks about the arguments coming out of the anti-tax movement. That document is called Order, IRS Summons. The rule of lenity. Look at this. 2008 Supreme Court case, very recent. Lenity is forgiveness or void for vagueness, lenience. And this is U.S. versus Santos, and in Microsoft Word I have these 2 paragraphs excerpted from this case at the beginning of the case, so you can see right here, this is why I picked this case out for inclusion in this course, is I wanted you to see these 2 expressions that are in this decision. From the face of the statute, there is no more reason to think that proceeds means receipts than there is to think that proceeds means profit. Under a long line of our decisions, the tie must go to the defendant. The rule of lenity requires ambiguous criminal laws to be interpreted in favor of the defendant subjected to them. This venerable rule not only vindicates the fundamental principle that no citizen should be held accountable for a violation of a statute whose commands are uncertain. That's the void for vagueness rule. It's a fundamental tenet of due process. You can't be required to guess or to speculate as to the meaning of penal statutes. The ambiguity should be resolved in favor of lenity or lenience. It goes to the taxpayer. 2008 case. Wonderful expressions of void for vagueness. And when they can't, you got the Melton decision that shows they don't consider Section 83. And then you got all the decisions that say Section 83 explains whether or not you owe a tax on your compensation. It puts you right in the middle of this expression. Let's see. Citizens should not be held accountable for a violation of a statute whose commands are uncertain. The rule of lenity requires ambiguous criminal laws to be interpreted in favor of the defendant. And once again, that's 2008, United States versus Santos. A wonderful echo of the void for vagueness doctrine right there. And let's see. I think we've covered all of these. And we already know what's in the IRS Publication 17 folder. A couple of repeats in there. These are repeats of these right here. So you can chop some of them up and still have full copies of the others. So that's our miscellaneous documents folder. Now, here's another expression of the void for vagueness doctrine. Look at this. These cases cite U.S. versus Kreitzer, 4th Circuit, 1979. Kreitzer is a very important decision for this reason. a bunch of cases cite Kreitzer. And they say, and we saw this in the Melton decision, the law is not highly vague or highly debatable, and so your argument about the Wallace decision does not apply here. And the Wallace decision is right, or Malice, excuse me, does not apply here. And they argued this statement applies to them. And he said, no, tax law is clear. You owe the tax because of this reason, and you have to file returns for this reason. And he gets into the laws but doesn't touch on Section 83. And so he says, since it's clear, this does not apply to you. Well, look at what this case says. It is settled that when the law is vague or highly debatable, a defendant lacks the requisite intent to violate it. And so it's not even about the conduct of the defendant. It's about the law itself. If the law is vague, you are not criminally intentional. And so that's the argument I would make first. Then you make the argument, my conduct indicates that I was not criminally intentional. I took my 1040 NRs and I filed them right into my administrative record. Or I wrote my offer in demand or international bill of exchange for $400 million and served it on the Treasury of the United States or on the IRS, whatever. It's obvious I believed I had the right to do that, or that I was within the law to do that. But that's about your conduct. I first, since I solved the tax code, I found big protections. I would first argue that the law is highly vague or debatable before they even discuss my conduct. And here's a nice Microsoft Word annotation of a bunch of cases citing Kreitzer and that sentiment. Kreitzer, 1974, but we have 1980, 1985, 2011, Fourth Circuit, 2000, and I think those are the most recent cases from among these. So it's a wonderful sentiment or maxim. It is settled that when a law is vague or highly debatable, you can't even have the intent to violate it. So if you have a law that's complex, or nobody would have even dreamed that that law was violated when you look at my conduct, you argue about the law first to see if you lack the requisite intent to violate it because of the nature of the language of the statute. It's vague, it's debatable. And below that annotation in this, 505-page document, you have each one of those cases. Each one of these cases is in this Microsoft Word document. So if I were to do a search for the word highly, fine, I can go case to case to case. There it is on page 3. There it is again on page 9. There it is again on page 10. So everywhere it says highly debatable, all through this document, I can just cruise right through here and see each one of those cases exactly where it says where the law is highly vague or highly debatable, you lack the criminal intent. Okay? Very important. You're going to see this letter, or this annotation featured prominently in the criminal intent letter in Microsoft Word that I've included in this course. And again, it's not legal advice, but if you want to go on record with a whole bunch of annotations and excerpts from these cases from the previous 2 seminars on criminal intent, and I hope you took the first one and second one before you even come to this third one, because they lay the groundwork. This is really built on the first and second seminars. You got all 3 on this flash drive. And in letters, you're going to see that I got a Microsoft Word letter for the movement. And you can put in there what you need to explain why you did what you did, and that you have a good faith belief that you never violated the law. We saw how important it is to go on record with exactly that. Now, Winston Shrout, fixture of the anti-tax movement, indicted, failure to file. Tax Code Section 7203. And we see it's only a 5-page indictment. The grand jury charges as follows. He made a lot of money. How much money? $18,000. So now you know that if you fail to file a tax return and all you made was $18,000, you can go to prison. Little fish and big fish. It doesn't matter to the government. If they can get you, they'll get you. Now, Winston Trout had a website. He had a curriculum. He offered services doing what he does for people. And the government felt that it was fraudulent and wrong that he do so. And so they indicted him. But these charges are brought over as personal compensation for services in very small amounts. $18,000. $19,000. Count 4, $19,000. Count 5, $21,000. How many people are in this boat? Making a lot more than that, but they didn't file. They run this risk. $21,500. Count number 6. And what are these? 3 years per count maximum? He's up to 18 years. And now the bad news. They superseded the indictment with this one. Now look what he's charged with. Counts 1 through 7, fictitious obligations. 8 through 10, fictitious obligations. 11 through 13, fictitious obligations. 14 through 19, failure to file tax returns. Now he's up to 19 counts. That's guilty plea time right there. From March of 2016. So he's going to spend the rest of his life in prison. He was preparing international bills of exchange. Let's see. During the course of this scheme to defraud, Shrout produced and issued more than 300 of these fictitious financial instruments, purportedly to be worth in a total over 100 trillion on his own behalf and for credit to third parties. That's a big fish from the anti-tax movement. He was asking for it. When the argument is as simple as saying, this person that came to my office, how did Section 83 operate? In your conclusion, they owe tax on their compensation. And instead, he's jumping through patriot movement hoops like a pro, and he's way out there in outer space, and he'll lose in front of any jury that hears the case. So he'll be in prison the rest of his life. It's hard to prove a good faith misunderstanding of the law when you're issuing $100 trillion worth of, what is that, 5 times the national debt? That's something else. So you see that even if all you made was $20,000 and didn't file a tax return, you can be indicted. And then they went this far so they could stick him in prison the rest of his life under a tax code they can't even explain. I am unfamiliar with Section 83. According to Sue Besson, who is an IRS agent or officer for 20 years, says that right on the stand. So they don't have to be familiar with the law. They simply make an allegation, and the judge will do the rest of the work to make sure you go to prison because, as I've said forever, every judge is as corrupt as the day is long. You can go through Winston's indictment later at your leisure. Now let's go to Rod Class. Here's an amicus brief filed by a legal professional. Very nice brief. And we see that it's in the Court of Appeals for the District of Columbia, so this is on appeal. And I can't remember who asked the amicus to write a brief for Mr. Rod Class. And it wasn't about taxes, it was about weapons in his car. And read the arguments here in a 37-page memorandum. Void for vagueness is argued. The gun ban is vague. The The Capitol grounds are expansive, and the Maryland Avenue parking lot is not a sensitive place. So he's saying they stretch the law out of shape. Citizens do not forfeit constitutional rights simply because they choose to go to a particular location. So there's a whole bunch of arguments raised here and a bunch of great case law cited. And to study, okay, you'll go to where they cite these cases in this memorandum. Read the memorandum, why they cite these cases, then you go read those cases that are cited, and then you read the cases cited in the cases that are cited to get a broad understanding of why this attorney cited that case. Okay? It's called research, and that's a brand new concept to 99% of the anti-tax movement. Eddie Kane. The indictment. Eddie Kane, from what I've heard, is old enough to rightfully expect to die in prison. This is a 2008 indictment. Conspiracy to defraud, mail fraud, that's a maximum of 20 years. And number 2, aiding and abetting, or principal. And here's his indictment, a pretty long one, 19 pages. And here's the details of the scheme. He helped people file particular documents. He was a big fan of the Section 861 argument, I'm a non-resident alien. Corporation sole were fake religious entities set up by ARL. If you read plenty of case law about corporation souls, you'll get the impression that only churches are allowed to set up corporation souls. So anyway, you can read this at your leisure. I'm not going to take you all through this. It's not the focus of this course, but you can see what will get you indicted. And setting up these entities, it's harder, it's more difficult to prove that you have a good faith misunderstanding of the law. Speaking of which, we'll now go to the James Back documents. This is in Microsoft Word. This is the Department of Justice trial memorandum filed September of 2014 in the case of James R. Back in the District of Alaska, where we see he was, let's go to his indictment to see what he was charged with. He's charged with counts 1 through 3, filing false and fraudulent tax documents, 7206. 4 through 7, failure to file. And the returns that he did file were Pete Hendrickson tax returns. And he was sentenced to 16 months in prison. A 60-year-old man, every year he was making over $120,000 as a pipeline technician up in Alaska, and he went down. Pete Hendrickson got out of prison and went right back to promoting his book with full knowledge that it lands people in prison. You can't stop the guy. I've got a roll of toilet paper right here. It's called Cracking the Code by Pete Hendrickson. And it causes people to go to prison, to suffer liens and levies, to have their houses sold for IRS liens. That's what Pete Hendrickson causes, and he's out promoting his book, claiming to be the best tax lawyer that ever wiped himself on the drapes. Count 1, filing false and fraudulent tax returns. We're in this particular document for a specific reason. In this, and you'll see this cited also in the criminal intent letter that I've written for the anti-tax movement. Look at this. Let's see. The government must prove. This is a Ninth Circuit criminal model jury instruction. A defendant who acts on a good faith misunderstanding as to the requirements of the law does not act willfully, even if his understanding of the law is wrong or unreasonable. So you could be wrong or unreasonable, but at least you got into the law and came to a conclusion, instead of having to claim ignorance of the law, which is not an excuse. Here we have a Ninth Circuit jury instruction in the government's own trial memorandum that says a good faith misunderstanding of the law means you're not willful. Right there. Nevertheless, merely disagreeing with the law does not constitute a good faith misunderstanding of the law. Hey, I disagree with that law. You can't come at me with that law. I'm not going to pay taxes on my compensation. That does not excuse you. But if you say, excuse me, but the law doesn't impose a duty on me. I have no duty to file a tax return or pay an income tax on the compensation I receive for my services for whatever reason. Section 1341, Pete Hendrickson. I'm a non-resident alien, Eddie Kane. You deprive me of the provisions of Tax Code Section 83. Me. So you can fit into this category before an indictment. That's the thrust of today's course. A defendant who acts on a good faith misunderstanding as to the requirements of the law does not act willfully. Now listen what they say. The government says, willfulness as construed by our prior decisions in the Supreme Court in criminal tax cases requires the government to prove that the law imposed a duty on the defendant. How did Section 83 operate? So I just killed number one. Number two, that the defendant knew of his duty. Well, he's got a bunch of tax returns claiming this protection. While it may be mistaken, it's obvious he relied on the law. He's not claiming ignorance of the law. He's claiming a certain understanding. When it's an understanding they can't refute at all, that's when the allegation that he acted willfully dissolves. And number three, and that he voluntarily and intentionally violated that duty. This is the government telling you that in 1991, the John Cheek case shows that this is what the government has to do to prove you go to prison. Three categories here. As construed by our requires first, the government proved that the law imposed a duty on the defendant, that the defendant knew of this duty, and let's take a different color here, and that he voluntarily and intentionally violated that duty. Okay, I choose green. Okay, 1, 2, 3. Three different components of willfulness. And what I'm trying to do is explain why the reason for my belief that a whole lot of people that have gone to prison out of the anti-tax movement and its minions should not have gone to prison. Because they proved they didn't believe they had a duty. Number two here. I can prove that you don't have a duty to begin with. The law does not impose a duty. So, the government itself explains to you the parameters of why you are or are not willful, right here in this memorandum. Willfulness is a state of mind that may be established by evidence of the fraudulent acts, not before you prove I had a duty. You first have to prove that the law imposes a duty. They would love to go to this one every time. Oh, his acts, Your Honor. Look, his actions. What about the law first? Because we know that if a law is vague or highly debatable, you can't be willful. Didn't we just cover that with the Kreitzer annotation? Yes, we did. It's easy to see the direction I'm going with all of this, and I'm doing it because of all the people that the anti-tax movement has landed in prison. Now look at this. Proof of willfulness in a criminal tax case may be, and usually is, shown by circumstantial evidence alone. Wrong. You just got through telling us that they have to prove that a duty was imposed by law. Listen to them run from that element of willfulness. Willfulness can be inferred. No, it can't, because one element of willfulness is that the law has to impose a duty. You can't infer a duty. You have to prove by law that a duty was imposed by the government's own words in this memorandum. Checkmate. This infuriates me to have to go this slowly through picking apart what they're doing wrong. Look, you have two different PDF versions of the James Back trial memorandum from the government. One is with Ralph Winterrode's highlighting, and one is without his highlighting. And you'll see he's not really beamed at the same places I am when I review this memorandum. Now, Pete Hendrickson, and then we're going to get into the letters. Okay, so we're nearing the conclusion of this course. Let's see here. Pete Hendrickson. Right here, Pete Hendrickson, full episode off of TalkShoe.com. My Private Audio is the name of the show on TalkShoe.com. TalkShoe. And Angela Stark is a wonderful lady that presents shows where she interviews tons of different people. And this episode is Pete Hendrickson, and he'll tell you, I'm the greatest tax lawyer that's ever wiped himself on the drapes. And he's wrong. He's an incompetent researcher. He doesn't understand and doesn't have a grasp on maxims of law, no appreciation for regulations and how to analyze regulations for whether or not they deviate from statute, which is the big story in the tax code. He has no idea about Section 83, lies about it to people that ask him about it. They say it doesn't apply. Dave Merlin's wrong. He doesn't know what he's talking about. Well, you know, the courts, the only way they said I was wrong is that you can't deduct your labor because you didn't buy it before you sold it. That's the only way the government ever got out of the argument. But Pete Hendrickson has a bunch of different reasons. Hey, it didn't hit the books till 1969. I don't care. All the courts, appellate courts, that means it's clearly established law, say that it explains how to tax my paycheck. Checkmate, Peter. Now, this is a full episode right here, the whole show, and here's a partial where the meat of my beef with Pete Hendrickson is articulated by him on this conference call. Now, Pete Hendrickson, Microsoft Word document, Angela Stark show. This is the text from the chat window on that show that day. And right down here, here I am in red. Or no, this is I highlighted somebody else's comment because it's interesting. Now, scrolling, you'll see data. That's me. Asterisk, data, asterisk. That's me. And somebody asks about the W-4 form and mandatory withholding for a W-4 exempt. And I said these two regulations were stricken in 2007, and that's because I identified them as overt acts of racketeering in my congressional complaint of 2006, and so they struck that regulation that had been there for decades. This is the regulation that says if an employer gets a W-4 exempt, notify us right away. And if we determine it's inaccurate, we'll have the employer deduct at the maximum amount. When in fact 3402N, as in nobody, 3402N says an employer shall not be required to deduct and withhold if there is in effect a W-4 exempt. These two regulations, subsections 2, subparagraphs 2 and 3, destroyed that statute. And so I listed them since 1993. I've been pointing to these as regulations that destroyed a statute. And people just don't catch on. I've got all this information, and no one's interested in it. Here I say, I work for people who get indicted trying this, what Pete Hendrickson is talking about. What does Mr. Hendricks have to say about all the people who landed in prison for fraudulent tax documents? And Pete Hendrickson was on the phone. He was not on the computer, so he couldn't see the chat text. And many have been levied with penalties and interest. Many have gone to prison. James Back in Anchorage, Alaska, guilty on 7 counts at trial. I can't take this guy. The damage he's done is incalculable. See you later, Angela. Always a pleasure. And I hung up because I couldn't stand listening to the guy. I'm the best tax lawyer that ever came along. I landed a bunch of people in prison. I went to prison. I got out of prison, and now I'm back pushing my book again because that's what I do, regardless of the fact that it lands people in prison. Prison, prison, prison. And here's somebody on the chat is saying the parallel table of authority shows that it's only alcohol, tobacco, and firearms. And I already showed you the 1992 memorandum that says that argument is invalid. It's not even a regulation. And it's supplied by the agency and may therefore can't be considered all-inclusive and may be inaccurate according to its own preamble. Anyway, that's the anti-tax movement. Now, two different reviews of Cracking the Code. You see, one is from 2014, one is from 2015. So one of those is going to be an amended version of the review of Cracking the Code that I wrote. We don't need to get into it here. What we need to get into here, though, is Waltner versus Commissioner. And here it is. I downloaded this off the web, and here it is. And in this case, Stephen T. Waltner relied on Cracking the Code, my roll of toilet paper. And halfway through this decision, tax court chooses to offer its review of Cracking the Code. And this judge goes chapter by chapter through Pete Hendrickson's toilet paper and picks it apart. So you have my review of it and tax court's review of it. Tax court has no clue about Section 83, or they're not willing to mention it. And you'll see it prominently mentioned in my review of Cracking the Code. And here's another guy beating up on Pete Hendrickson in a case from 2014. So for your edification, Waltner versus Commissioner. Have fun, be fun, enjoy yourself. And here's a bunch of cases with Pete Hendrickson in them. One of these, or more, are about putting explosives in U.S. Postal Service mailboxes, and a postal employee that suffered burns because of those explosives, which saw Pete Hendrickson go into prison. Now, letters. Covers first. These are exhibit covers. When Joe Lunchbucket attaches to his criminal intent letter, he might have exhibits. And this is how I prepare my exhibits. Exhibit A, Joe Lunchbucket's correspondence from the IRS. And so I'll print off this page, and then in black magic marker, I'll put a 1-inch tall A in this blank here, in the footer. So if you can picture the public servant that's reviewing the file and wants to see Exhibit A, they need only thumb through the lower right-hand corner of the document to find the exhibits. Exhibit B, Joe Lunchbucket's correspondence from the IRS. Of course, for your exhibit, you would amend this, just for the ease of printing this, or of making this for this course. I repeated Joe Lunchbucket's correspondence from the IRS. Exhibit B, same thing. Exhibit C, the IRS's 2013 edition of its frivolous argument list. Maybe that's an exhibit you want to include. Your exhibits will differ, because I don't file what the anti-tax movement files, and you, in fact, might have. So your exhibits will be different, and that's where I would erase this line or delete this line and type in the nature of my exhibit. And then when I print these off, the first thing I'm going to do is write my 1-inch tall letter in this blank with a black magic marker, so that when I make photocopies, I don't have to go back through and put my black magic marker on 6 different copies of this page if I'm mailing to 6 different public servants. So you want to first put this, fill in this blank with a 1-inch tall black magic marker letter, then make your photocopies. The mens rea letter in Microsoft Word, in PDF. This is a protected PDF document to show you what people file when they work through my office. And so you can't alter this document, you can't copy and paste it, and it contains a statement of belief about the law based on two primary arguments. The government says I'm a citizen of the United States. Well, then I know I can't be chapters 2, 21, and 23 because those definitions of citizen expressly exclude citizens of the United States, which leaves just chapter 1, where there is no statutory definition of citizen, and so they wrote a regulation, 26 CFR 1.1-1, to make citizens of the United States liable under Chapter 1 in violation of the 16th Amendment that says Congress can collect this tax. It has to be a statute. If you hadn't written that regulation, there's nothing in the tax code that would subject me to any of its taxes when all I receive in the 50 states as an American, capital gains or compensation for services. That's argument number one. Number two, how did Section 83 operate in your conclusion I owe a tax on my paycheck, my fees, my tips, my self-employment earnings? And we know they can't answer that either, and we know why. So this is an example of how I framed a statement of belief, a notice of understanding, that I don't have a legal duty to believe in. If somebody chooses to argue the way I argue the tax code. So you want to read this whole letter and see, this is a quote right out of the James Back trial memorandum that we just read from, that the DOJ filed. And then we have Elonis versus the United States, covered at length, exhaustively in the first and second criminal intent seminars on this flash drive. And again, you want to have taken those two before you take this third one. You want to go through the first two courses. And then into Santos, that we just read, the rule of lenity requires ambiguous criminal laws to be interpreted in favor of the defendant. So this letter has everything in it. Now, statement of understanding. If I'm a citizen of the United States like you say I am, I'm not in Chapter 2, I'm not in Chapter 21, and I'm not in Chapter 3. And this leaves only Chapter 1. And in Chapter 1, I'm only mentioned in regulation. I'm not mentioned in statute, in violation of the 16th Amendment. Further, Section 83 applies to all compensation, and the amount paid is the value of any money or property paid. And so you deprive me of Section 83. Key. The IRS and the Department of Justice and the courts calculate income tax liabilities related to compensation without regard to these statutes, as I just showed you in the Melton decision, and here it is again, where they say, furthermore, your duty is clear. Section 1, Section 63, Section 61, Section 6011, 6001, 6012, and therefore the law is not vague or highly debatable, as you argued. And so that simply does not apply here. So what we just read in those cases is right here in this letter, in the framework I've written for stating an affirmative belief that the law protects me, all property is a cost, and I'm not even named in anything other than a regulation in the first place. What were you thinking by approaching me over a tax on my compensation or capital gains? Do you have a brain in your head? You're obviously in a conspiracy against my constitutional rights to property, and that's a federal felony under 18 U.S.C. 241. I could arrest you on the spot. What were you thinking, approaching me with the tax code? Did you hear how quickly I just ran through their will to indict me? I just chopped it to ribbons with two different sentiments, two different statutory arguments. Now, when you convert these to PDF, sometimes they turn around the quotation mark there. But other than that, you'll find this work pretty much impeccable. And here is the cases saying any property means all of it. right through Eastern District of Kentucky, U.S. District Court, 2015, 2014, 2013. Any questions? And they all cite the Gonzalez decision in the Supreme Court, which is right here, Gonzalez, which is one of those 4 Supreme Court cases that the government won, saying the term any means everything. And here are excerpts from particular cases about the term any. And you can read this at your leisure. I'm not going to stop and read every word of these. You read them, and they speak very clearly. I'm on firm ground when I say that any means everything. Fifth Circuit, 2015. 10th Circuit, 2014. 8th Circuit, 2013. And 9th Circuit, 2015, the case of United States versus Neal. And here's the address of that case. It's actually a link. If I clicked on this, it would take you to the case online. And so I lay it down. And then I tell them, I've relied upon the law to formulate these conclusions, and until you fully explain how I'm mistaken, I got to believe that you're engaged in a crime. You're conspiring against my rights. 18 U.S.C. 241, conspiracy against rights, and you're also committing extortion, 872, and you're demanding sums other than are imposed by law. You should be fired. And so deem this to be my criminal complaint to your bosses that you're stealing from me. Conclusion. Here's more cases that say when the tax man can't identify the law that imposes the taxpayer wins. This is a Supreme Court case from 2001 citing state Supreme Court cases here we go. When the tax man puts his finger on the citizen, he must also put his finger on the law permitting it. If words are doubtful, the doubt must be resolved against the government in favor of the taxpayer. The provision is part of a taxing statute, and such laws are to be interpreted liberally in favor of the taxpayers. Justice Clarence Thomas, in a concurring opinion, 2001. Thank you, Justice Thomas. And here's the Kreitzer annotation. It is settled that when the law is vague or highly debatable, the defendant lacks the requisite intent. And there's the whole annotation that we already looked at. So you see, I'm pounding on criminal intent on behalf of people in the anti-tax movement that have a good faith misunderstanding. They aren't ignorant of the law. They've taken courses. They read a roll of toilet paper named Cracking the Code. They have a good faith belief. They aren't just ignorant of the law going, get away from me with that. I don't have the mood for you. You're not just disagreeing with the law. You have a good faith misunderstanding. You did everything right out in the open. You didn't try to hide anything. And yet you go to prison. It's because they don't educate the grand jury on what it takes to be criminally willful. They don't cover this. And so I cover it in this letter based on my findings. And here I get into the courts have frequently held that reasonable cause is established when a taxpayer shows that he reasonably relied on the advice of an accountant or an attorney, or maybe on the IRS in publication 17 when they said your cost is your services, or I relied on regulation, presumably they're written by an expert, the Secretary of the Treasury. Gee, I read statute, presumably Congress knows what it wants to say. This court also has implied that in such a situation, reliance on the opinion of a tax advisor may constitute reasonable cause for failure to file a tax return. Rely on somebody. And with my analysis of the code, you have the opportunity to rely on regulation. This is not legal advice, but this is what people have done who watched their criminal investigation by the IRS shut down. People who saw the grand jury investigate them and didn't return an indictment. When an accountant or attorney advises a taxpayer on a matter of tax law, such as whether a liability exists, it is reasonable for the taxpayer to rely on that advice. Well, I didn't go to an attorney or an accountant. I went right to the tax code, and I see 1.83-3G. My cost is the value of any money or property. I can't figure out how to exclude labor from that. Can you? And the best they have is a 20-year agent that'll say, I'm unfamiliar with Section 83. So I can pull their pants down with tax law. But even with a mistake, such as the anti-tax movement aficionados and the exotic garbage that they produce, a lot of good people can argue, you know, while I shouldn't have relied on them, and they are not the expert, I still have a good faith misunderstanding of the law that I got from them. I didn't just do what they suggested. I, in fact, looked at the law. I went and clicked on a doggone footnote, and it scrambled me. Okay, here we are. And so I didn't just rely on Pete Hendrickson. I went to Section 1341, and I read it, and I read a few other statutes, and I think that this is an exception to 61A gross income. And I didn't just rely on somebody that said I'm a non-resident alien. I went and read some of the cases that say state citizenship exists, and some cases on limited jurisdiction of the federal government. And so I didn't listen just to the guru. I actually looked at the law. So it's not that I'm ignorant of the law. I studied the law. It might have been under somebody that was incompetent, but I have that good faith misunderstanding of the law that absolves me of an accusation that I'm willful. And these are about the prosecutor. The prosecutor should disclose all evidence at their disposal. Such suppression is far more serious than mere non-disclosure of evidence. If they suppress evidence of your innocence, that would include evidence that you relied on the law. So these are about the prosecutor. Failure of the government to obey the law cannot ever constitute legitimate law enforcement activity. How did Section 83 operate in your conclusion? We didn't consider Section 83. It's not part of the equation we follow. See U.S. versus Melton. We went through that paragraph. They don't list Section 83. So this is the letter that I wrote to adapt to a statement of understanding, notice of understanding that I don't have a duty if somebody were to subscribe to my analysis of the tax code. If they wanted to go on record saying, you deprived me of Section 83 and I'm only subject to this because you wrote a regulation in the first place. Now, we just took this to U.S. District Court in May of 2015, South Dakota, 1 year ago. And they said you failed to prove Article 3 standing, meaning you didn't prove there's a controversy, or you didn't prove the IRS is responsible for the controversy, or you didn't prove that the court could solve the controversy if it gets involved. Well, excuse me, but as an exhibit, they had a criminal complaint that went to 80 members of Congress in January of 2006. And we didn't prove that there's a controversy? Really? We informed the court that for over 20 years, they refused to get into the language of the regulations under Section 83. So anyway, there's one attempt. We're going to file an amended complaint in South Carolina in the coming week or so, because now a guy in South Carolina wanted to file one of these lawsuits. However, the court's duty was to interpret the provisions relied upon. See Barnhart, Supreme Court, 2002. Listen to this. This is what they have to do, and they won't. As soon as you raise Section 83, the judge's job runs right out the door. As in all statutory construction cases, we begin with the language of the statute. The first step is to determine whether the language at issue has a plain and unambiguous meaning with regard to the particular dispute in this case, unless it's Section 83. And then all of these great cases out of the Supreme Court and expressions of how the judge's job is to say what the law is, it flies right out the door. And here's the statute that said, in the Hybertson case in South Dakota, they were required to get into the statute. The Administrative Procedures Act, 5 U.S.C. Section 706, the reviewing court shall hold unlawful and set aside agency action found to be arbitrary, capricious, and abuse of discretion, or otherwise not in accordance with law, contrary to constitutional right, power, privilege, or immunity, or in excess of statutory jurisdiction. How are you going to determine any of this if you don't get into Section 83? So the IRS owns the courts. Every judge is as corrupt as the day is long. The taxpayers were entitled to know the basis of law and fact on which the commissioner sought to sustain the deficiencies. No, you're not. As I understand the law, 26 U.S.C. imposes no duty of any nature whatsoever upon me as concerns tax returns or any tax imposed by any chapter or statute therein. This is my statement. Here's a sworn statement under penalties of perjury, and now you have my notice of understanding. And here's my certificate of service. It went to the Department of Justice, to the Attorney General, and to an office of the IRS, presumably that you've got correspondence from the IRS, and so I would send a copy of this to the person that sent you that correspondence. If you have others, in your version will be Microsoft Word. So you delete this line and type in the addresses of the people that you sent copies to, and then have somebody else sign your certificate of service. Okay? And again, that's worded to accommodate my approach. And here is the mens rea letter, the movement. You're going to see in this letter, I took out the parts that apply to me and my approach, and I left spaces in this for you to describe your approach. If you're in the tax movement, anti-tax movement, and you did Pete Hendrickson's trip or somebody else's, you would describe yours in certain portions of this letter. And this is not legal advice, but if you want to make the same statement in relation to your conduct to the government, you can delete the portions of this letter that don't apply to your conduct and write your own description of your understanding of the law into this letter. It's in Microsoft Word. And it ends the same way. So back to the beginning here. Free advice. Stay away from the anti-tax movement. You saw that Pete Hendrickson went to prison, got out of prison, and he's back pushing his book again, with full knowledge that it's caused tens of thousands of people to be leaned and levied into poverty with frivolous filing penalties. A bunch of people went to prison, like James R. Back in Alaska, 16 months. A 60-year-old going to prison. He was making $125,000 a year. And filed Pete Hendrickson tax returns, and Pete Hendrickson is right back out on the air saying, pounding his chest, I'm the best tax lawyer to ever wipe himself on the drapes, everybody. Look at me, I'm big, I'm bad, I'm nationwide. Dave is wrong about Section 83, and I don't care what kind of cases he has that says it applies to all compensation. Buy my book. Wow. I have a word for that. I have two words. One of them I can tell you, shyster. The other one is not kind at all, and it's profoundly profane. So, free advice. The best you can do in America is to pay the amounts the IRS says you owe. And at the end of the year, you look at the amount you ultimately had to pay them to keep them out of your life, and you look at that as the price of admission to the shouting match with your congressman. It's all you can do. You want to be able and ready to prove that you don't owe them a dime the way they figure taxes. You do not step into the arena because the law does not count to government. With all the knowledge I have of the tax code, and as powerful as these two arguments are, they don't work against a lien or levy because there's no trial jury. The only people you're involved with are public servants, and they believe their mission in life is to steal you blind to where your children are malnourished. And so you don't poke the beast. The best you can do is to keep them out of your lives. It's worth it. Start a home business. Gather all the deductions that H&R Block says the IRS will allow. Exploit them. Keep your receipts. Do everything the way a small business expert says you should arrange your affairs to minimize your tax burden. Somebody that's already been to court or been preparing tax returns for a long time. Preferably somebody that has former IRS agents on staff. It's all you can do. But if you fear an indictment, I feel you should go on record right away with your statement of belief. A notice of, what did I call this? Notice of understanding. That I believe for a certain reason or reasons that I don't have a duty to believe in, and that explains why you haven't received a tax return from me. It explains why I don't pay you what you say I owe is because I don't owe money on my self-employment earnings. It's compensation for services. I don't owe money on my wages, and so I didn't pay you. But in the future, if I were you, just to know they'll be out of your life, get in line with what the IRS says. It's your only choice. Or you're going to have a permanent relationship with a government that thinks they ought to spray Iraq down with depleted uranium ammunition so that hundreds of thousands of babies die in the womb of radiation poisoning. You want a permanent relationship with a government like that? You don't see anybody out there campaigning to stop the use of that ammunition, do you? Who wants a permanent relationship with a government that would do that to babies? Much less the rest of all the mismanagement and corruption that if we wanted to spend a year here to go over. So don't form a relationship with the government by poking it in the eye with anti-tax movement, rhetoric, and contrivances. This is what you do. You go on record with your belief, and then try your best to keep them out of your life. They'll still lean and levy you, but you can greatly diminish the likelihood of an indictment in the future. So here you have the same criminal intent letter, is what we'll call it, my notice of understanding. When you're done with it, and it looks nice, the bottom of the pages are neat and tidy, the top of the pages are neat, no stray text, no half of a sentence at the top or bottom of a page. Then you want to count how many pages you got, and you double click on this footer, and if you got 15 pages, amend that to say 15 pages instead. Okay, and then you click on close, and now your footer will say the same thing on every page, page 2 of 15, 3 of 15, whatever. And in the middle here, you have your explanation of why you did what you did. If you're going to attach exhibits, here they are. Delete that blank and write in IRS correspondence or IRS frivolous argument list or whatever you're going to include as exhibits. And I scroll forward to say that I'm not willful if I have a good faith misunderstanding of the law. Willfulness is part of every, or criminal intent is part of every statute. That's the Elonis case out of the previous courses. And scrolling forward, statement of understanding of the law included in the attached exhibits. Let's see. The attached exhibits contain a sworn statement and briefing of my conclusions about the law. Put an affidavit in there, a memorandum in your exhibits. And then summarize your findings. The reasons I've acted the way I've acted, I'd put those in here as 1, 2, 3, 4, whatever. And if you can't prove I'm wrong, consider this to be my criminal complaint against you, because you're after me for things I don't owe. And then the conclusion, and write your own conclusion. The United States government has done this, done that, and I don't agree. And I think that I relied on the law for my conclusions, and so you should construe this in my favor unless you can disprove my findings. And the law is vague or highly debatable if you can't disprove it. And so I'm going down the list, just like I did in the first letter. And I've left these blanks here, obviously, for you to fill in, put any other comment you want in there. And then swear under penalties of perjury, this is the way it is. This is in blue because you won't be sending to this address. This is one office of the IRS, but chances are your stuff will not have come from that office. And here's the blanks that I can delete and write in other addresses just as I wrote these in. And there I have my complete letter. if I'm in the anti-tax movement and I really believe I haven't violated the law and I could be indicted, I want to go on record with an explanation as to why I behaved the way I did and that I believe I've acted without criminal intent. I have a good faith misunderstanding or an understanding if you can't disprove what I've done. And so make sure the grand jury gets this. And this is your attempt to prevent them from going to a grand jury in the future. That's what this is directed at. And again, none of this is legal advice. My name is David Merlin. Thanks for acquiring this course on criminal intent. Please don't steal. This course is very reasonably priced. Buy a copy of the course. Don't take this flash drive and run off a bunch of copies for your friends. That happens to be one of the reasons I avoid like the plague the anti-tax movement, is that they're notorious for doing exactly that to any course they get. And again, I can't stress enough, this is not legal advice. But if you fear in the future you may be indicted, personally, I would want to go on record with a statement of my beliefs. I briefed my key findings in a 58-page memorandum. I put them behind a criminal complaint that went to 80 members of Congress January 1st of 2006, saying that until you've dissuaded this with cogent refutation, these are my conclusions, I'm going to continue to act upon them. 80 members of Congress. I went on record with my beliefs. And this is how I would further do it if I were having problems with IRS harassment. Thanks again for taking this course. I conducted this course out of my concern for your future. You don't deserve the negligence and derelictions of duty of those in the anti-tax movement, especially Pete Hendrickson, but there are a couple of other real shysters out there that they simply don't deserve the light of day. And I'm tired of working for people that are headed to prison. I'd rather work to successfully keep people from going to prison. You want to visit talkshoe.com, TALKSHOE, talkshoe.com, and enter 87488 in the show ID window, and you'll hear us discussing. There's a whole archive of calls about my analysis of the tax code at talkshoe.com, 87488. And we're talking tax law almost every episode. So thanks again for taking this course. Of course, I hope it benefits you in the most important of ways to keep you out of prison. And before you take this course number 3, you definitely want to take course number 1, which you'll see has a seminar video. You take the video first and then review the document. Number 2, you take the video first and then review the documents on your own. And here, in number 3, you're going to have the video right here. It's going to appear, this video that I just shot. So have fun, be fun, stay out of the IRS's way, and I really hope I don't receive a call from you with great big problems in the future. Thanks now.